Hello students, in present video I am going to explain about fifth problem from journal lesson. I am taking this question from Telangana State Telugu Academy Inter First Year Accountancy Textbook. But this video is useful to all commerce students who want to know about journal topic. First four problems links are available in the description box and in iCard. I request you to watch those videos first. Then only you can understand this problem. Let us start the question. First transaction date is 1st April 2019. Transaction is Dinesh started business with cash 50,000 rupees. Here Dinesh is owner of the business. Owner started the business by bringing 50,000 rupees cash. This is the transaction. Every business financial transaction contains minimum two accounts. To write the journal entry, those two accounts we should identify. This is firm. Our assumption is we are an accountant of the firm. So while writing journal entries, every transaction we should analyze from firm's point of view. Dinesh is bringing cash into the firm. This is the transaction. While writing journal entries, there are some steps. First step is identification of accounts. Cash is coming. Cash account is one account. Dinesh is bringing that amount. Dinesh account is another account. Second step is grouping. Means we should identify this cash account comes under personal account or real account or nominal account. Account is divided into three types: personal, real, nominal. If any account is opened with a person name or firm name, it is a personal account. If any account is opened with an asset name, it is a real account. And if any account is opened with an expenditure name, loss name, income name, or gain name, it is a nominal account. Cash account. Cash is an asset. Therefore, it is a real account. With the person name, we opened account, Dinesh account. It is a personal account. Second step, grouping is completed. Third step is apply the double entry principles. For real account, double entry principle is debit what comes in, credit what goes out. Think from firm's point of view, cash is coming. Therefore, debit cash account. For personal account, double entry principle is debit the receiver, credit the giver. Dinesh is giving cash to us. He is a giver. Therefore, credit Dinesh account. And Dinesh is owner, no? Owner's name we should not write in the accounts. When owner's name come in credit, instead of writing owner's name, we should write capital word. Then final entry is cash account debtor to capital account. Narration is being business is started. Second day transaction is sale of goods for cash 10,000 rupees. Sales transaction is given. When sales transaction is given, we should observe 2 points. First one, what they sold. Second one, how they sold. Clearly is giving that firm sold goods for cash. Goods are sold for cash. Customer name is not given. To the customer, firm sold goods. Goods are going. And as this is cash sale, immediately customer paid cash to us. Cash is coming. Two accounts are cash account and goods account. Both are assets. So these two accounts come under real accounts. Real account rule, debit what comes in, credit what goes out. Cash is coming, debit cash account. Goods are going, credit goods account. When goods come in credit, instead of writing goods word, we should write transaction name. This is sales transaction. Therefore, write down sales account. Then final entry is cash account debtor to sales account. Narration is being goods are sold for cash. Fourth day transaction is purchased goods for cash 15,000. When purchase transaction is given, we should observe 2 points now. What they purchased, how they purchased. Clearly has given that information. Firm purchased goods for cash. Supplier's name is not given. From supplier, firm purchased goods. Goods are coming into the firm. And on the same day, firm paid cash to supplier. Cash is going from the firm. Two accounts are goods account and cash account. Both are assets. So both come under real accounts. Real account rule, debit what comes in, credit what goes out. Goods are coming now. According to real account rule, we should debit goods account. Cash is going from the firm. Therefore, credit cash account. When goods account comes in debit, instead of writing goods word, we should write purchases. Then final entry is purchases account data to cash account. Narration, being goods are purchased for cash. Sixth day transaction is sold plant and machinery for cash 5,000 rupees. This is sales transaction. We should observe 2 points. What they sold, how they sold. They sold plant and machinery. Plant and machinery comes under fixed asset. You know the meaning of machinery. What do you mean by plant? A place where industrial activity is undertaken. Means a place where manufacturing process is undertaken. And it is sold for cash. This is cash sale. Then, to whom we are selling, person name is not available. Take one imaginary name X. Firm sold plant and machinery to X. Plant and machinery is going. And X paid cash to us. Cash is coming. Two accounts are cash account and plant and machinery account. Both are assets. Both accounts come under real accounts. Real account rule is debit what comes in, credit what goes out. Cash is coming, debit cash account. Plant and machinery is going, credit plant and machinery account. And instead of plant and machinery, we need not to write sales word. That rule is applicable only for goods. When goods come as an account, instead of goods, you have to write sales or purchases according to the transaction. This is fixed asset, no need to change the word. Final entry is cash account data to plant and machinery account. Narration is being fixed asset is sold for cash. 10th day transaction is cash paid to Rahim 3,000 rupees. Why firm is paying cash to Rahim? Because firm is liable to Rahim. Means before this date, firm purchased goods from Rahim on credit basis. Firm has to pay the money to him now. On 10th date, firm settled his account. From the firm, cash is going. Two accounts are Rahim account and cash account. Rahim account, with the person name we opened this account. It is a personal account. Cash account is a real account because cash is an asset. Then apply the rules. For personal account, double entry principle is debit the receiver, credit the giver. Rahim is receiving cash. He is a receiver. Debit him. Real account rule. Debit what comes in, credit what goes out. Cash is going from the firm. Credit cash account. Then final entry is Rahim account data to cash account. Narration, being cash is paid. 14th day transaction is salaries paid 8,000 rupees. This is expenditure related transaction. From the firm, cash is going to employee. Two accounts are salaries account In case of expenditure, one account is expenditure name account and another account is as cash is going from the firm, write down cash account. Here employee's name we should not take as an account. Even though he gives employee's name, we should not consider that name. In case of expenditure and in case of income, even though person name is available in the transaction, don't consider that name, because to whom we are paying that expenditure, from whom we are receiving that income, that person names are immaterial to us. We need only expenditure name and income name. Salary. To the firm, salary is an expenditure. With expenditure, when we open any account, it is a nominal account. Cash is an asset now, real account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Salary is an expenditure to the firm now, debit it. Real account rule, debit what comes in, credit what goes out. Cash is going, so credit cash account. Then final entry is salaries account debtor to cash account. Narration is being salary paid. With this, fifth problem is completed. Hope this video is helpful to you. Thank you.